everyone, this is a trader investor. I want to start off today by going over the non-farm payroll report that came out this morning, 5:30 a.m. Pacific time, 8:30 a.m. New York time. The expectation was we are going to add 725,000 new jobs. That was the expectation. The result was 850,000. So this is a fantastic number. It's really great number. However, this was a little bit tampered down because the unemployment rate went from the expected 5.6 to 5.9. Slightly higher unemployment number. So I don't know how this is possible as we're getting new jobs created. I mean, I guess it's possible. I mean, new jobs are created, but more are lost, or more people are applying for unemployment. So, without going into any detail why we have this discrepancy, the main thing is what the markets do today based on these numbers. Markets kept rallying, kept really rallying. And what I mean by rallying, well, we closed yesterday and we gapped up today, and after the first 15-minute range we have not seen the bottom of that day. Today's bottom, we have not seen it yet. So price keeps pushing up. Not only that, if you look at a hourly chart, you can see that we've been making a series of higher highs continuously, right? Since the 21st of June, we've just been rising and making all-time highs. If you look at the daily, you can see very clearly consecutive all-time highs, 1, 2, 3. Then we skipped one day, 4, 5 days of all-time highs. We just keep pushing and pushing and pushing. At some point, we are going to get a breather. Breathers are opportunities for us to enter the market again. So where is a good place for a breather? Where area of value? The structure right now is an uptrend. I have drawn these trend lines for that uptrend. Price coming to test this uptrend and moving back up is a healthy area of value. This is a good area for us to be able to enter the market again. There are imbalances left this morning, imbalances left a few days ago. We could potentially go down and close those imbalances before we resume. That doesn't mean the structure is broken. It just means that for a day or two we just go down, take care of that. Now, if we go down to take care of this order block down here, then I would venture and say structure is broken. We might be in a pullback. However deep that pullback is, it's irrelevant. It's going to be a pullback, and based on what the charts tell us, we will resume the bullish momentum once we get a break of structure of that pullback. But for now, we continue to make an uptrend. No matter what time frame you look at, we're going to continue to make an uptrend. And for an entry today, it's similar like yesterday. When you have a gap up above the highs, you enter. When you have a gap up above the highs, you enter. Fantastic opportunities both days. Yesterday, at least at some point, it gave you a pullback re-entry opportunity. Today, there was no re-entry opportunity. If you wanted to wait until the 15 minutes break high, which gave it to you after 15 minutes, 431.77 to the high of 432.26. It's not $1, but we don't know how far it will go, so we traded. And we keep our stops tight, and we just keep moving up. But if you had taken on the open, fantastic move from the open. Really fantastic move. Again, not yet $1, but still fantastic move. So this is how the SPYs are setting up. Qs, another strong day, gapped up. Now Qs didn't push up significantly after the 15-minute range, if you could have taken it again, same concept, taken it from the gap up and see where it goes, or just wait for pullback and re-entry. I prefer the SPY today. This is my play for today, is the SPY. IWM leading indicator, it gapped up slightly above yesterday's high, but then it kept pushing down. Now this divergence between SPYs and IWM signals to me that IWM is going to lead us to some short-term pullback. It doesn't have to be necessarily deep pullbacks, but to some short-term pullbacks that we can anticipate and prepare for. So that's why, like on a day like today, with a long weekend coming up, no trading on Monday, exit all trade positions for me today. I will not hold any trade positions today because I don't know what's going to happen over the weekend and on Monday, right? 3 days of an unknown, especially when I'm seeing an unknown divergence between IWM and SPYs. Diamonds, well, diamonds again, similar to SPYs, keep pushing up for higher highs continuously higher highs. We are not at all-time highs, but we keep pushing for new highs, and at some point the diamonds are also going to get to all-time highs. Diamonds are lagging for now, but while we wait for that lag to clear, this is what we're seeing, is just a continuing push up. But with IWM not making higher highs, IWM is in a consolidation. It just keeps ranging. It's been ranging for a few months now. It's been ranging. So when IWM decides to get out of this range, this is when we know we are in business for all markets to continue to go up. But for now, IWM is, as my leading indicator, is saying, hey, I could be pulling back. I could be taking the market down for a while. You never know. So I want to see break of structure in IWM to be extremely bullish. I'm still bullish based on what I see, but I'm not extremely bullish yet because I want to see IWM lead us strongly to the upside. And coming back to the SPYs, I don't see any significant divergence in the oscillator. As you can see, when there's divergence or price is making higher highs and we fail to make higher highs in our oscillator, then it's a little bit of a concern. As you can see, it's flat, but it's higher highs. This is why you get some pullbacks. This divergence does not tell us the depth of the pullback. Key thing to remember. It just says I have divergence, I could potentially pull back. So you see it a couple of times, it pulled back, but the markets are really strong, the bulls are really strong, they're not letting price drop significantly, they step back in and take the price back up. So this divergence, if it continues to happen, we just monitor it and just not be in a rush to say, hey, I'm in, I'm gonna hold for a very long time. No, I'm in and I'm gonna be nimble and get out. Like if you're in way down here, maybe holding up here, it's okay. But if you're in on pullbacks and not knowing how deep this pullback is, just make your stops tighter and just watch what the markets are telling you, and then just keep riding the rest, right? Or if you have taken significant gain and you only have a small position, whether that position goes to zero or not, you're still in a gain, then you can let it ride. That's also a good strategy. It just depends on your account size, how many contracts or stocks you bought and how many you sold, and so on. So risk management is key there. Don't give back your gains. Sell when you want to sell, not when you have to sell. You have to sell means it has significantly dropped, hits your stop loss, take you to a loss instead of a gain. Don't do that. Don't give back your gains, just watch it. but spies are setting up very beautifully today. But because of IWM, I'm a little bit more cautious. Alright everyone, that's all for today, and I will see you in the next video. Take care for now.